is Joe Lavorgna, chief economist for the National Economic Council at the White House. Joe, who pays attention to jobless claims, even though I accused you of not doing so a few weeks ago. It's good.
I knew you were, Sarah. I knew you were, and I knew that you knew that I was following very closely as well.
So you're following closely, and there was some real signs of improvement in today's data. But I would still say it's the highest ever when you look back historically, higher than even the height of the financial crisis in terms of how many Americans every week are filing for jobless benefits. How does that fit with your view of the V-shaped recovery?
You are exactly right. In this case, Sarah, since the economy was, as you know, forced to close, it wasn't, an economic imbalance. It wasn't about the Fed over tightening. It wasn't about inflation pressures picking up. The economy was forced to close. And now we're seeing its natural recuperative policies, along with administration policy and, of course, the CARES Act, which was unanimous and bipartisan, bridge the gap from the closing to the reopening. And what we're seeing, as you mentioned, the claims falling so hard. The continuing claims numbers, which we spoke about last week, are falling even more quickly. They were down over 1 million. They've been down on average 1.1 million over the past month. That's telling us the labor market is gaining steam. It's gaining traction. So, yes, we're not where we want to be. There's still a lot of pain out there for people, but we're making an improvement. We're making it much more quickly than people thought. So the trend is very important. And I think that's the key thing. We're on the road to improvement and betterment much faster than almost everybody thought just a few months ago.
But it also reflects, Joe, that a lot of people are becoming unemployed for a longer amount of time. The shift to the pandemic unemployment assistance emergency compensation that you have out, that rose by 500,000 people. It's above 3 million as their benefits expired on the regular program. So what does that tell you about the long-lasting effects here?
You're absolutely right about that. So some people who have left continuing claims have now gone on to the federal program. But if we look over the last 3 weeks, when the initial unemployment insurance would have expired, what we've seen is about 2 million drop in the continuing claims data, adjusting for the federal program that you cite. So in other words, even though some people haven't found work and are still collecting unemployment insurance and they're being captured someplace else, the numbers are still showing nearly a 2 million decline over the past 3 weeks. So that's very important. And you are correct. There are some jobs, unfortunately, that are not coming back. However, as I've highlighted before, if we look at the Census Bureau's new business application data, that was up at a record amount in the third quarter, almost 1.6 million applications for new businesses. So the good news is many people who lost employment will be starting in new roles, new jobs, new firms, new industries. So there's still, I would argue, a lot of good news that's coming forward, despite, of course, the pain that's still there. And obviously, we want to do more to get people back to work, no question.
So is a stimulus needed, and how much?
The stimulus is certainly needed. The president has talked about helping the airlines. We want to give money for schools, for personal protective equipment. The PPP, the Payroll Protection Plan, Wilford, was extraordinarily successful. It's saved upwards of 50 million jobs. There's certainly things that we both agree on both sides, and certainly extra support would help. It would even further galvanize what I'd argue is a very strong V-shaped recovery. We're in a self-feeding, self-correcting recovery. If we don't get the stimulus, that view doesn't change. However, if we could help people, and there's a lot that both parties agree on that could be done to get people further along in dealing with this issue, then let's do it. So it looks like we're making some progress on that from what I see on the various headlines. So the economy's not going to falter, but let's do what we need to do to get people the help they need.
I'm not sure that's what most economists would say, Joe, that it doesn't matter if we get stimulus or not to see continued growth. I mean, there are some that are predicting negative growth in the fourth quarter with the uncertainty out there over whether stimulus passes.
Sarah, I don't understand why those people are so pessimistic. I think part of it's the fact they've missed the recovery to begin with. They never had the unemployment rate falling as quickly as it's fallen. They didn't have GDP up at 35% as the Atlanta Fed has it. What we see is the consumer spending data. The momentum we had through the third quarter was excellent. The September numbers were fantastic. We had recently small business optimism data, which showed basically a 2-year high in hiring intention. So they're telling you they're going to hire people this quarter, which offset some of the concern that maybe people can't find employment. So that's really good. And the other thing, Sarah, is people are missing what should be a very large inventory rebuilding cycle. So to me, a negative type number doesn't really make any sense whatsoever. I can't tell you what the number is going to be, but I wouldn't be surprised if it's very, very strong. So to me, there's too much pessimism out there, and that's I think part of my role is to try to explain to people the data look good.
Shepard Smith here. Thanks for watching CNBC on YouTube.